coming directly from Doha. We're gonna have Dheeraj Ahluwalia with us, and Dheeraj is going to share with you his journey of digital transformation and operational excellence in financial services. What is digital transformation, and how do you deliver a digital transformation profitably? What is operational excellence, and how to deliver it enhancing customer experiences, and how to deliver hyper personalization, and what are the biggest risks in delivering digital transformation and operational excellence, and how do you mitigate these risks? And finally, what are the critical success factors in making transformation and operational excellence work for you, the company, and the client? Now, Dheeraj brings over 30 years of global banking and financial services experience, having led and worked on digital transformation initiatives with Bank of America, General Electric Capital, Qualcomm, MasterCard, Standard Chartered Banking, and most recently at Doha Bank. His favorite phrase is, "I am not interested in technology, but very interested in what it can do for my customers, the business, and shareholders." Now, Dheeraj's presentation will be via audio only. So I am going to remove myself from camera. You're gonna listen to Dheeraj directly talking about his perspectives on digital transformation, operational excellence. And I encourage you to submit your questions during his presentation. There will be no slides. There will be no camera. There will only be audio for this presentation. So I want to make sure you understand that, so that you don't think there is anything wrong. It's an audio only presentation. And at the end of his talk, we're going to bring your questions and we're going to relate them to Dheeraj. So just want to make sure you understand that, because I'm going to be off camera and you're going to be hearing his voice and his presentation orally only. So without further ado, Dheeraj, thank you so much for taking the time to share your expertise and experience with our more than 2,000 global participants today at Financial Services Live.
Thank you, Jose. Good morning and good evening, depending on what part of the world you've joined from. I look forward to the next 30 minutes to share my perspective and really look forward to your questions and feedback at the end. So I'm going to speak mostly from a financial services, i.e. banking and insurance standpoint. Really, the first thing I want to lay out, that I think we've all heard the slogan that in life everything is 1% inspiration and 99% perspiration. So I'm a big believer in that. And if you look at digital transformation and how it has evolved in the banking world, I think there has been a slow, steady, but a very prominent shift of how customers are onboarded, what kind of products and services are now being catered to by banks and financial service organizations, and how customers are paying for them and the pricing that they're paying for them. So we're going to talk about 4 or 5 very key things from a CEO's perspective, because ultimately the buck stops with him. He's the sort of chief business officer and responsible for the P&L in terms of delivering a compelling financial performance to his shareholders and his board. At the end of the day, technology is only as useful as the impact it has on the P&L. And a lot of organizations, I think, early on, when the whole wave of digital transformation started, went after technology like a shiny penny syndrome. They look at something that is a very exciting, sexy sort of technology, and they deploy it with a lot of capex and realize that, the actual business benefit was not what they had expected, or it was that they got swayed away with a lot of the pizzazz or the appeal of the technology, and really at the end of the day, it was a white elephant. And very quickly, the banks around the world, and this phenomena happened across several continents, and then very quickly the banks around the world realize that you've got to keep the business perspective as your central perspective. And today, I think it's safe to say that anybody, whether it's a CFO, a chief digital officer, a chief transformation officer, a retail banking officer, a corporate head of corporate banking, I think any of those, if you ask them, look, what is the main objective of your digital transformation, you'll get a very clear answer. It has to do one of three things. Either A, drive the revenue and profit, B, reduce cost, or C, improve my customer experience. And ideally, it should at least hit on two, if not all three of those objectives. So that is now the new perspective and the new paradigm. And of course, with more and more economic pressures, especially driven by COVID, it has had a tremendous effect on the ability of the organizations to really pony up a lot of budgets around capex, and things are becoming extremely tight when it comes to prioritization and making sure that the initiatives that a bank or a financial institution are taking from a transformation standpoint very clearly deliver the value that the business case was promised or internally circulated and socialized. So that's the first perspective I want to bring around digital transformation, that it has to have a very strong and a compelling business case and a very clear linkage to the P&L. It cannot just be that, I'm going to put this technology, or I'm going to put this analytics platform, and it's going to be the best thing since sliced bread, and therefore transformation is good. So those days are gone. Okay, now there are 4 or 5 key elements around digital transformation. Let's start with customer experience, or what I simply call UX UI, and I think those are very, very popular words thrown around in the transformation. UX is customer experience, UI is your user interface, right? So let's talk about that. In a very simple manner, a lot of organizations today are getting more and more disciplined and more rigorous around what UX, UI really mean to their customer. Earlier, there was a paradigm to have very nice, flashy screens, very sexy art and collaterals as part of a mobile banking screen or an online banking screen, and that was sort of the genesis or the definition of UX UI. Today, UX UI means, can I onboard my customer in 10 to 12 clicks, where it's a very intuitive, simple roadmap? By just taking 3 or 4 inputs, he enters his mobile number, he takes a selfie, I do a liveness test check, he enters his ID and his email, and everything else is click, click, click. And it makes it very easy and very seamless for a customer to onboard himself. That is a very tangible definition of UX UI today. Can he apply for a loan, he or she apply for a loan inside of 6 or 7 clicks, and the money be dispersed seamlessly within minutes into his account? Can he or she apply for a mortgage, which is a little more complex product, and get at least an approval in principle on how much money he can borrow and how much down payment and what his payment would be, so that at least he has a pretty good idea from a budgeting standpoint where he stands? So UX UI today has become a much more disciplined science than what it used to be as part of transformation, and it's getting more and more disciplined and more rigorous. And by that I mean simple things like, you would have a lot of institutions are now doing what we call pulse code methodology, meaning they pulse the customer at every interaction point to see the drop-off rate, and then they use that to optimize each and every touch point to make sure that they maximize the retention, create such a sticky journey that it minimizes the drop off and makes it very, very simple and intuitive in a very natural language for customers to come on a platform, a digital platform, whether it's online or mobile, and to be able to transact in a very convenient and seamless manner. And even the language in which that the financial institutions now are offering is a very conversational, easygoing language and not your stiff banker's language. You want to make a payment, you enter the amount and you say go. Or here in the Middle East, they say yalla. So, and of course, they would have similar colloquial terms over in UK and Australia. So it becomes a very conversational way of creating the UX, UI, and that really creates stickiness with the customer. The second biggest differentiator when it comes to UX and UI is today you do not require a huge operations department on the back end. Okay, and this is extremely important because typically, if you really look at it, there has been a two-stage digital transformation in the financial services. The first stage was where every institution sort of digitally dressed up the front end. Okay, it's like putting nice paint and lipstick on a beautiful building, so to speak, on a mobile app or an online, and that created a really nice sort of experience the first time you log in. But then they realized very soon that all the processes on the back end were all still, you had a huge army of people shuffling paper, stamping and signing and scanning the documents and then uploading it into a workflow. And then there was a maker, there was a checker. So you may have sort of impacted 20 or 30% of the costs that were the upfront costs. But then there was the 60, 70% of the factory on the back end, which was very people and paper intensive, which continued to stay while you had a very nice, digitally sexy front end in terms of a mobile app. So then the phase two came where, a lot of the banks, and even now a lot of digital banks are going through that, where they're not profitable, they're not making profit, and they're realizing, look, I've digitized a lot of my front end, and why am I not making profit? And then they start to analyze, and it's no rocket science before they can say, look, I've got a cost income ratio, in the 50s or in the 40s, depending on which region you're in, and I have tweaked the 20% on the front end. This is where all my energy is gone, but the 80% on the back end, which is really driving the cost, is untouched. So now, as part of phase two, what has happened is you get a very simple digital workflow, which then is thrown into or integrated into an admin portal, and it's a very, very seamless front to end digitization. So you take a very simple example. You take OCR as a technology, and it's optical character recognition, where if a customer is on loading up a document, very simply with AI, the OCR will read to 95% accuracy the information submitted by the customer, throw it in a digital workflow on the back end, and this can be done in any major language known to mankind at peanuts of a cost end to end. Where earlier you had a very nice front end where you could load it, and then on the back end there would be a lot of back and forth in terms of rework and errors, because the technology was not that great and you didn't have a digital workflow which was completely digitized on the back end. So a process is only as good as a technology is only as good as the process around it. So you really have to make sure that your processes are conducive to be digitized end to end, to then be able to throw the technology around it. Because if you throw good technology against a bad process, you still get a very suboptimal outcome in terms of cost and in terms of experience, and even in terms of your total turnaround time frame for that process. So there's another very famous saying in the digital transformation world that a fool with a tool is still a fool. And the same goes for processes in a way. You know, a process that's really broken or not conducive to having a straight through pass through first time around. It's not real lean. It's not it's not streamlined. Will end up with a lot of rework, no matter how good technology you throw at it. So it's very important to make sure that you get your processes streamlined to then be able to get the maximum from the technology that you overlay around it. So that's the second aspect of it in terms of making sure that your P&L is actually getting impacted not only by digitizing on the front end, but also on the back end. Now, the next thing that a lot of the banks realized that, look, while I have done this, I've got some limitations of what I can do in terms of volumes I can throw. So then they started to quickly think through how I can make my platform scalable. And that was not that tough. I think there's a lot of good players and good products out there from a technology standpoint that now make platforms that are very easily scalable. And by scalable, I don't mean just between states, but I'm talking about between countries with all the different frameworks that you have to accommodate from a regulatory standpoint to be able to offer seamlessly banking to customers sitting maybe in UK for a US digital bank. So I think that's the other aspect of it. And of course, with that goes some amount of approvals with the regulator to register yourself to be able to offer ubiquitous banking. But more and more banks are now starting to do that and cut across continents. The third element, I think, of digital transformation that really changed the game in terms of the whole experience of the UX UI was that of hyper personalization. And this was possible as a result of technologies like artificial intelligence coming in. What that created was the ability to be able to, I use the analogy of a subway. You walk into a subway and you can pick your bread, tell whether it needs to be toasted or not. You can pick your cheese, you can pick your meats, you can pick your veggies, and all of that customized sandwich to your taste, and off you go at a very cost-effective price. And why couldn't you do that with banking products? Why can't you log into a bank and design your own credit card or design your own savings account or design your own checking account or your mortgage? Now, banks are taking a leaf from the page of a much older business to understand the design principles around how a subway is orchestrated, for example, and can cater to 20, 30 different flavors of sandwiches and yet make it instantly real time, very cost efficiently and very effectively. And if you really look at it, they've got it so well down that they actually can sustain the ups and downs of a sandwich industry, economic cycle than if somebody had opened up their own personal sandwich shop, like a Dheeraj's sandwich shop. That's how efficient, the operation and the power of process re-engineering is. So they've taken that and overlaid technology with a bunch of analytics which is enabled through AI to create that same hyper personalization. It started with simple customization of a few things where you offered 3 packages to the customer. You could pick product A, or credit card A, or credit card option B or C. So you had 2 or 3 variants of a credit card that you could pick. Now, the way the the current level of transformation is you can almost design your credit card. You can pick the categories on which you want your loyalty points. You can do multipliers on those loyalty points. If you are a fan of dining out, and that's all you care about, you can actually take all of your loyalty points, multiply and stack it on dining. If you love to travel, you can do the same. So literally you can design how you want to be rewarded for the purchase behavior as per your lifestyle and as per your needs. And you can dynamically change that. You could go through, 3 months of, hey, I'm going to be traveling. Let me realign a lot of my points into my travel bucket so I get a multiplier effect and can accumulate them. And then later on, or if you're grounded because it's COVID and all you're doing is take out, I'm going to change it to dining. So there's so much customization, so much flexibility now as part of the digital transformation that the financial services organizations are now starting to offer very effectively. You could very simply, do payments with a 2-click. You could, actually do a remittance, and you would get so for those of us who are like here in the Middle East, it's a perfect corridor where you want to remit money to some amount of to your family and friends at the end of the month. That's a very typical cross-border remittance, and the hyper personalization is now to the point where if your base currency in which you're earning, whether it's Qatari riyals or AED, or Kuwaiti dinars, the moment there is and the other side, you're from India or you're from UK, and the pound or the Indian rupee fluctuates a little bit, immediately you would get a notification and an alert, in-app notification from your financial institution saying, hey, look, the pound has fallen now. It's really a good time to remit money. And you could just click 2 clicks and pretty much enter your amount and complete the transaction. So that's the level of hyper personalization that's happened. You pay your bills, for example, car insurance. Stage one of digital transformation was you would get uh, uh, the ability to be able to schedule your car insurance payment on a recurring basis every month. Now you get a reminder for a renewal, and not only that, do you get a set of competitive offers commensurate to sort of your car insurance policy guidelines, your limits, to where there's a recommendation of how you can save some money. And that is taken to the next level of hyper personalization. If you go out and dine out on a Friday night with your family, typically as a behavior, Thursday evening, you will get dining offers, very commensurate and similar in choices to the dining out you do on Fridays, and you'll be able to pick and choose. And again, that's another example of the kind of hyper personalization that is being offered by banks. These banks, of course, they call it lifestyle banking, and they are catering to all elements of your lifestyle, from protection products like insurance all the way to leisure and convenience products, and of course, your mandatory things like your utility payments and so on and so forth. Okay, so hyper personalization with UX UI has really made banking a lot more fun. It's made it a lot more lively in terms of the experience that a customer now, it's getting closer and closer to sort of an Apple experience when you buy an iPhone. Now let's talk for a minute about, profitability. How do you really make money from all this? One of the very simple ways that you make money is by digitizing your high cost areas, and I touched upon it in the very beginning, which essentially is taking a lot of your fixed factory, back-end factory, and digitizing it as much as possible with very light manual touch to oversee the technology workflows and make sure that everything is flowing through. And that is actually starting to manifest into the cost income ratios of various banks and financial institutions, which typically have ranged from high 50s all the way down to mid 30s. Now you're starting to see banks get into mid to even low 20s in terms of cost income ratio, and that's a clear step function improvement in terms of the ability of your P&L. You take a financial organization that's operating at a 20 to 25% cost income ratio compared to 50, 55. You can clearly see the level of digitization and transformation, not just on the front end, but the heavy lifting in terms of process reengineering and digitizing all the back end, which is very, very cost intensive. All right. The next thing, that the way you make money, of course, in a financial institution are essentially two things. And it's either your interest income, which is your net interest income, or your fee income. And typically banks have different ratios of that, when you talk about, corporate, or you talk about consumer banking. Now, the way that the banks, they've realized that, look, because I'm having to offer much more efficient and streamlined products and there has been margin compression as a result of it, I have to get smarter and smarter in how I aggregate the total spend from the wallet of my customer. How do I get better at cross-selling? What that means is you've got digital transformation platforms where you have a very loose open banking API structure, and you can pretty much integrate with X number of lifestyle services, whether it's Uber or Netflix or a Travelocity website, where you're basically integrating and aggregating all the various spend categories and trying to bring them under one mobile app in a very convenient and intuitive way for your customer, so that he uses your platform and your platform alone to take and make all his lifestyle choices. And that helps the organization drive more fee income from being able to orchestrate that experience, which then makes the financial institution more profitable, where the transformation has actually created some stress in the margins. So the ability to offer the right product at the right time, or to be able to make the right promotion, what we call the right offer at the right time, in a very contextual manner, creates your ability, and of course using AI and some amount of UX UI, creates the ability to be able to more efficiently cross-sell, to where you are able to pick and aggregate a lot more of the customer's wallet spend, which you were not doing typically 20 years ago or 10 years ago as a bank. And that has certainly added to the overall profitability. So as a result of reducing and digitizing your back office factory and being more efficient in terms of being able to do third party fee income type products, you're able to really become a lot more profitable as a digital bank. The third element is, banks actually really have two functions only. If you were to simplify a institution, they either lend money or they take money. Okay, when they lend money, that's where they make a lot more income from you as part of the interest income. Very simple. You loan money. So how do you get more efficient at lending money, especially to low-income people, which want to sort of aspire and become, emerging affluent, and want to live a little bit above their means, and yet do it in a manner where it doesn't create a lot of defaults, or where they don't stretch and use the credit to get way in over their head. And you do that now very efficiently through the digital channels by simple micro credits or micro loans. So gone are the days where you offer big loans. Now a lot of the banks are offering small micro loans, used to be payroll loans in a very traditional branch sort of a underwriting and approval manner. Now you can go on an app of a digital bank and take a loan for 30 days or 45 days or 2 weeks, and repay it, or an overdraft or a simple top up. Small microcredits, very profitable from a financial institution standpoint, also serve a very important need for the customer, and therefore it's a win-win for both. And this is a third element that has actually contributed to profitability of a digital only sort of a bank, where they've learned to lend money responsibly but in a much more efficient manner than before. So it's a combination of saving costs, just to recap, driving your NFI, which is your fee income, through becoming a one-stop shop and aggregating multiple lifestyle partners into your platform, and then driving your NII, which is the net interest income, again through being more efficient as a lender. You're able to really optimize your P&L and start to make some profit. Now, let's talk a minute about a couple of other things. Today, if you ask a CEO what is the one thing that keeps him up all night, whether it's a digital bank or a traditional bank, and especially if it's a digital bank, and most banks today have mobile banking, online banking in its simplest manner for sure. He will give you one answer and one answer only: cybersecurity or risk. He's most concerned about some kind of a fraud that sets him back 5 or 10 years of income, or some kind of a fraudulent transaction that slips through and violates central bank's ordinance, and that institution is fined a big fine, and that sets him back 5 or 10 years of earnings. And that by far is the biggest risk today the organizations face in a digitally transformed world, especially financial services. So how do you mitigate the risk, when you are a digitally transformed bank? Because every touch point creates risk. And you could have an AML violation, or you could, which creates a huge fine, or you could have a simple fraud where somebody just drains money out, hacks into your customer's account, or you could even have a data leak. And we've seen many examples of this over the last 10 years, and it just seems like that the hacksters seem to continue to evolve as security products have evolved. But in the most simplest way, let me just offer you 2 or 3 sort of basic strategies around mitigating risk that the banks are doing today as part of digital transformation. So number one, any document that is uploaded, a lot of the digitally transformed banks automatically watermark it. That helps prevent creating doctored documents with multiple versions, and helps mitigate fraud. Number two, any document today that's uploaded, the digital transformed banks have good technology that immediately scan for malicious codes and viruses. Again, that reduces the ability for any kind of a man in the middle or any kind of a cyber attack. They have deception technology that actually lures in hackers who are trying to hack into, a banking website or a banking mobile app. So those, and then the fourth thing that they have is a very good sort of AI-powered anomaly detection software, which is underlying their platform, and based on your IP address as a customer, the time of your transaction, the amount of your transaction, the your location of the device, all of those factors, create a certain level of analytics to confirm and make sure that you are within the parameters of your normal behavior, and the slightest variation to that automatically throws either an in-app notification, or it'll throw depending on which part of the world you're in, you've got OTP, one-time password sort of processes, or a secret question process. You'll be immediately triggered to ask for one of those things to get engaged, to verify that this transaction was actually originated by you. And those are some of the ways of how you mitigate risk. So let me recap. To mitigate risk, you have either watermarking documents, or you have automatically constantly checking for malicious codes and viruses. And of course, you have very good analytics that do anomaly detection to make sure that any behavior, the slightest of the behavior from a customer standpoint that's outside of the parameters of his normal behavior, immediately check to verify whether this is the customer. Now, in addition to that, there's a whole host of cybersecurity products that have become more and more at a sort of a very technical IT level, that have become extremely sophisticated day by day, that the CTOs of various banking and financial institutions are deploying now to make their platforms a lot more secure and a lot more rugged to these cybersecurity attacks. And that's the essentially the elements of how you mitigate risk. I just want to do a time check and see if I've got a few more minutes to talk about a couple of other things. Jose?
You're doing great, Dheeraj. We are at the time frame 8 minutes to go here, and you can use it for completing, and then any time left we'll use for Q&A.
Great, thank you. So last thing I want to talk about is the thing I started my my whole presentation with, which is essentially everything is 1% inspiration and 99% perspiration. Now let's talk about execution and delivery. Okay, so a lot of banks, a lot of organizations have struggled to implement digital transformation. Simple initiatives that were supposed to be implemented within 3 months or a few weeks, end up becoming, a year, 18-month projects. And of course, usurping all this human capital in terms of payroll costs of ops and IT folks, being thrown at an initiative to where the cost to deliver that becomes extremely, extremely high. So over the years, as various banks have gone through various digital transformation exercises and journeys, they've realized and gotten smarter and smarter at how to deliver and implement digital transformation. So of course, you started with the traditional waterfall sort of project management approach, where you take an initiative and you break it out into phases, and you say this is phase 1, this is phase 2, so on and so forth. Then came the whole agile project management methodology, which said, no, we could just break a project into independent, simple multiple units, and then we could just concurrently work on all these units and deliver whichever we can deliver first and fast, and be a lot more agile, and then piece together the full project at the end, and hopefully we would have saved some time and costs, and therefore the agile was sort of, it took on as a very, very popular way of project managing. Well, what the technology companies realized, or the fintechs realized, that it's very easy for a technology provider or a fintech to come into a banking organization and say, look, I can run 100 miles an hour, but you're not set up in your environment to run 100 miles an hour. So while I could clearly schlup the technology, test it, and say, Khalas, I'm done, it's ready to go, you can take it on, it would not do you any good. It's like trying to drive a Ferrari on a dirt road or a cobblestone. You can only go so fast. So they realize that they have to work with the clients in a manner but together they could run maybe 60 or 70 miles an hour to where they can deliver the project, get it live in a cost efficient manner, and the client is getting the full benefit of the agile sort of project management or delivery methodology. And it came as a very simple compromise. And now what you see, the digital transformation roadmap is a combination of a waterfall and an agile, where basically they take small user journeys that they are developing within a platform. These small user journeys are developed end to end. They are then released efficiently, put into a testing cycle, and launched. And they do that across multiple user journeys concurrently to save time, save costs, and make the whole journey for the client, not just the fintech, also efficient to where they can run faster within the constraints of their organization. Last but not least, there is the regulator, there is the compliance, and there is legal. And if you ask any business or a transformation guy, he would say, you know what, I could design an onboarding process where I could onboard a customer inside of 7 clicks. But by the time I get all my compliance approvals and go to my regulator and get approvals, that 7 clicks becomes 37 clicks. And I can't get away from it. So then there was a whole learning curve and a learning experience as part of the transformation journey for financial institutions on how do you effectively, work between that 7 and 37 clicks to make sure that you end up at 12 or 14 clicks and don't, start with 7 and end up at 37 every time. And that takes a bit of learning curve, and it takes a bit of experience and savviness and domain expertise, how to creatively solve problems while not diluting the compliance parameters or taking unnecessary risks around the regulator guidelines or the legal framework. And believe me, it is not an easy problem to solve, but as part of transformation, I am glad to share that now the financial institutions are getting much better and better at getting to those 12 or 14 clicks as opposed to succumbing to 37 clicks. And that has been a tremendous learning within the whole transformation sort of scenario out there. And this is a global phenomenon, by the way. And many banks today and many continents are going through various stages of this. And this is by far one of the biggest impediments to transformation, or shall I say, a learning curve in a positive manner, where how do you, on paper, if you can design a process that you can onboard a customer in 7 clicks, as a matter of speaking, by the time you're done with your regulator and compliance, you can still manage that within a tight sort of overall process and not 7 become 37. And that, along with your hybrid project management approach, I think gives you the ability to be able to execute and deliver cost effectively and efficiently your digital transformation projects and your initiatives within financial institutions. Technology for the sake of technology is not the end all and be all. It needs to make sure it's a technology that can solve in terms of lowering your cost, increasing your revenue through all the things, and of course, meaningfully increasing your customer experience in a practical manner, in a pragmatic world where the regulator says you're good to go, your legal and compliance say you're good to go, and you're still not taking a customer through a 37-click journey. So those are some of the critical elements around digital transformation as part of the journey. I wanted to sort of offer that hopefully today as a strategic sort of perspective so that, and I'm sure some of what I've said you've already done, and you're probably sitting there and thinking, yes, been there, done that, got a T-shirt to show for it, and this is really some of the universal themes, common themes that all of us have gone through over the last 10, 15 years as transformation has evolved in banks, depending on which part of the world you are there, and it's very gratifying to have sort of get to a point now where banks are becoming much more sophisticated as retailers, as consumer banking entities, where they are able to offer an experience and offer it very efficiently, very cost effectively, and in a very contextualized and customized manner to their end customers, as opposed to the monolithic segmentation that used to be 4 segments or 3 segments, which is where traditionally the banks were. So, with that, let me conclude my presentation and say that if you have any questions or would like to talk about any specific thing in particular, I can go into more detail. Over to you, Jose.
Dheeraj, thank you so much for taking the time to share your insights and experience. We are out of time on this session, but we will take questions from the audience. They can go on LinkedIn under the postings that we have for this conference, and you may pose your questions directly there, and we will ask Dheeraj to come back to that post at a later time and provide any additional answers and insights. But on behalf of our global audience, Dheeraj, we want to very much express our gratitude for you to taking the time to share your very important insights and experiences in the financial services and banking industries. So thank you so much for being here with us today.
My pleasure. Thank you.
Ladies and gentlemen, that was Mr. Dheeraj Ahluwalia, directly from Doha, to the world, and sharing his more than 30 years of global banking and financial services experience with us, and reminding us again that we should not be interested in technology, but what it can do for our customers, businesses, and shareholders. We're going to wrap up the session, and at the top of the hour, we're going to be welcoming directly from Europe, in the UK specifically, Dr. Arthur Proqis, who is the lead business architect on financial crimes for Deutsche Bank. And he's going to be talking to us about terminating relationships with the customer. Why would you do this? And how would you do this? To find out, log back on at the top of the hour, and where we welcome Dr. Arthur Proqis directly from the United Kingdom to our global audience. So see you back soon.